Hello there guys, welcome to Pure Trading. I've practiced this video such a lot of times. My wife sitting next to me knows the material better than I do. Okay, so can we learn anything about trading from Leonardo da Vinci or Leonardo DiCaprio? I don't think so, but we can learn a lot about projections and extensions from Leonardo Fibonacci. Let's have a closer look at him quickly. Okay, so we are all familiar with the retracements and the extensions, but what about price projections and time projections? Before we get there, though, let me just give you a little bit of history about Fibonacci. The thing is, we need confidence in the guy, yeah, or the thing that we are learning, and then that way we are more able to apply the stuff and then stick to a strategy or stick to something that we can see works. So if we know a little bit more about the person, we just tend to stick to it a little better. So why does this stuff work? Look, it appears all over in nature. I'll show you when we get to that part. But Fibonacci was born in Pisa in Italy, and he traveled a lot with his father, and he studied in Morocco under the guidance of a Muslim teacher. Before this, Europe was, they used Roman numerals to do any of their calculations and things. So it, there's a complicated sum, then you're going to need an abacus to to do it. So with the use of this Arabic numbers, Indo-Arabic numbers, there it becomes just much easier. So he learned this from a Muslim guy. We don't know the Muslim's name. We don't know this Arab's name. Those things are all swept under the carpet. So what but how is this thing of beauty going to show us the money and point us to a good strategy? Firstly, the basis here, the numbers. How do you get to the Fibonacci sequence? How do you get to the number? So it's quite simple. You start here at 0 and then 1, 1. The next number is 2. So how do you get to 2? It's just this 1 plus 1. How do you get to 3? It is 1 plus 2. So it's the preceding number. So if you look at 144 here, which is the last Fibonacci on the list here, if you want to get to the next one, all you do is add the previous one, which is 89. So 144 plus 89 is 233. So that's your next Fibonacci number. But that stuff doesn't matter. What matters here is the ratio. The ratio between the two numbers. This 233 and the relationship it has with 144. Take 233 divided by the previous number, you're going to get 1.618. Now that's the golden ratio. Now the magic is that the series can go on till infinity. So you can always be adding the numbers here, and every preceding number here, the relationship between that is always 1.618. That is the golden ratio. And in Forex, we use the golden ratio, which is 0.618. We use 1.618. We use the square root of 0.618, which is 786. We use all of these numbers. So it's the relationship between the numbers that we are concerned with. So let's have a look here. Also some more power, some more reasons to follow Fibonacci, or to, at least make Fibonacci part of our strategy somehow. It appears everywhere in nature, everywhere. Before you were born, you were an embryo. This is you sitting here, and that is the Fibonacci ratio. So it looks quite similar. That is our ear, and the Fibonacci ratio forms part of the makeup of it. The solar system, the Milky Way, the way the planets are aligned, the distance between the planets, it's all the golden ratio. The predictions of hurricanes and the predictions of weather cycles, even the way the waves move. This is all you can use Fibonacci to predict how big the next wave is going to be, or when the next thunderstorm is coming. We use it in architecture. Now look, this is even in our own DNA. This is 1.618, and that is 1. So how are we going to use this in Forex? Can we use this to our advantage? I think we can. These are the numbers that I like using on top here. Now, these are all relationships, as I said before, between the Fibonacci numbers. So there are 3 things really that Fibonacci can help us with, and that is extensions. That is the familiar one. The retracements are even more familiar, but the price projections and the time projections, this is where us as retail traders don't really pay much attention, and I think that is where the gold lies. So retracements, everyone knows this. These are my favorite numbers, 0.38, all of these numbers, and my very favorite is 0.786. That's Bismillahir Rahmanir Rahim. In Arabic, that's in the name of God. So every single time I'm pressing a trade, I feel God is on my side. Okay, so this here is a clear uptrend. We can see it. It's got highs, higher highs, lows, and higher lows. So what you do with a retracement is you find the low, you find a high, and you take your Fibonacci tool and then you draw it up toward the trend line, or up in the same. If it's an uptrend, you're taking the swing low to the swing high, and then you're going to get the retracements. So in this case here, we get a 38.2 retracement, and then prices are respected at that level. And then again, another retracement of price, and it's respecting the 50% level before it goes back up. So just for the beginners out there, prices are going up here. It's making higher highs all the time. So you're finding a swing low, dragging it up to a swing high. So you get this tool on MetaTrader. Those are all free tools. And then the retracement. The retracement is just the measurement of this existing line. Again, it's just the relationship of this line. So if prices comes all the way down here, prices goes up and it comes all the way down, that is a 100% retracement of that line. So this here is a 38.2 retracement of this line, and then prices reacted off that line. And here 50% prices reacted off the line. And then here my favorite 786, Bismillahir Rahmanir Rahim, prices comes down, hits the line, and goes all the way back up, makes a higher high. But now you might ask, which one of these retracements should I trade? Which is the right one? Is it 38.2? Is it 50%? Is it 786? Are we supposed to trade them all? No, you don't trade them all. Fibonacci, if you use just this one method, which this one is the retracement, then you are not using Fibonacci to its full advantage, to your full advantage. So you're going to need to subscribe to the channel and watch a little bit further so that I can show you what it is you should be doing in this areas here, and which one of these retracements you should be taking. So the next thing here, another example on for a Fibonacci, you see prices are making highs, higher highs. You find a low, you find a high, and then you see prices retracing on 38.2 and 50%. In that case here, it just bursts through the 50%, but then here it touches the 618, or almost touches 618. But you see, you can trade them all, but the best one again in this case was the 786. Now the strategy doesn't say look, buy at the 786. That's not what I'm on about. It's just a coincidence that the 786 was respected again in this area. Then in a downward moving trend, what you do now is you find the highs there and lows on the chart. You take your Fibonacci tool, you draw the line from the high to the low, and then the relationship that you're going to be finding now is the relationship of that line here, of how the distance between the high and the low. So if it comes all the way up, it retraced 100% of that line. Or in this case, you can see it retraced 50% of that line before coming down. But before that, it's also reacted a little bit here off the 38.2. So which one do you take? Was it the 38 or was it the 50? So we will examine that a little bit further. So the extensions, this is the second clue that Fibonacci trading is going to help us with. And what I'm using here is 1.272 and the 1.618, the golden ratio. So what do we do with extensions? So in an upward moving trend, you want to find where the potential is, where prices are going to then turn back and swing down. So let's say in this example that you are trading long. Yeah, you are trading long and you've taken this trade here. So where is the best place for you to take some profits? That's what the extensions are basically used for. So you take your swing high to the swing low, then in this case prices retraced all the way back up to 100% of this line. So it's always the relationship between price and the current price and this move, the swing high to the swing low. So this is 100%, and we can see prices reacted off the 100% in that case, and then prices goes up to the 127.2, a little bit more reaction there, and then finally prices comes up to my favorite level where extensions are concerned, which is the golden ratio. Prices comes down, a nice move down off from the 1.618. So projections now, this is the third part. These are the projections I'm using. So you've got into the trade and now you want to find out where you can take profits again. So let's have a look at the projections. So let's say you have a low. You need two lows with a projection. Yeah, that's a low and that's a higher low. So let's say you've taken the trade here. Where could you take profits, or where would price react next? So this is what happens. You take your high, you take your low, and all these tools are free on MetaTrader and TradingView and all the rest of them. So you take your low, go up to a high point, come down to the higher low, and then you can see it bursts right through the 100 retracement. So what is, or not retracement, the projection. So what is this projecting? It's just the measurement of this first move up here. So you are measuring the distance from the low to that high. So that's equal to, let's say 50%, which means 50 points. And then this 100% is also equal to 50 points. So it's just the same distance between here and here, and the distance between the next high, which is from there to there. And in this case, it's 161.8 here, where there's a little bit more action. And in a downward moving trend, let's say you got in on a retracement, you want to know where best to take some profits. So you've take your high there and your lower high, you project it all the way down and then back up again, and then this line is what you are measuring. So you are assuming in this case that your first swing down, 100% of that swing would be here, and then in 1618 is a little bit further down. So you're going to have to adjust your MetaTrader numbers for your tools and stuff. But if you have any questions on this, you can always just email me, message me, or leave comments below. We can go over this a lot until you got this information down. The next one here, the way we use the strategy. So if you manage to stay throughout the video up until this point, that's a thumbs up for you actually. And this is the part where it gets interesting. So, I don't know if it's 5% of people that's going to stay and watch right through up until this point. So congratulations to you. And don't forget to leave a thumbs up and comment below this video. So now the important part of the strategy, the triple confirmation. So we're going to be using the retracements, extensions, and the projections, all to find out where the best places are for us to trade from. So in this case here, we are looking at that as a high there. So we would like to turn prices down. Yeah. So what we have, so we don't have the rest of the information anymore. So what we have here is a price retracement all the way up to 786. So we know that this point here is where we wanted to trade, but we don't only just want to take the 786 as blindly. Yeah, that's the 786. So that was one confirmation on how to get this. The other confirmation here on how to do this is to try and get a price extension. So now you are drawing your line from here down to there, so you can get 1.27.2 there as your price extension. So now you've got two reasons to trade that same level. Let us just go over that part again. We are looking at this part here as a potential move down. You see, we have a failure to follow through up here in this area. But how do we know to pull the trigger to go short here? So a lot of Fibonacci traders would take the Fibonacci tool from the high to the low and then get the 786 and then put all their money on this trade going short. But in our case here, you need triple confirmation. So we know that's a 786, but also we can see here that prices are extending to the 1.27.2 at the exact same level as the 786. You see? And then another third confirmation here is going to be the projection. So we have the low and the high, and it's going to project for us to 100% here, which is exactly the same as the 786. So there are three confirmations in that area to try and get short. So with this strategy, the triple confirmation strategy with Fibonacci, you need three reasons to get into the trade, all confirmed with Fibonacci. Let's try and do this more on a graphical way here so that we can see it a little bit better. So here we can see our highs and lows and all of that, and we're looking at this levels here as a retracement. So what you do here is you take your low to your high, and you might get your 50% retracement. So now that's one reason to get in on this trade. So you see an uptrend and you would like to rebuy, but when? So you got one reason so far, 50%. Then this is now a tip. You can't be drawing your levels higher up or to these highs. It needs to go up to the highest high, yeah, in an uptrend. So in that case, you draw your fib from year to year, and you got a 78.6 retracement in that area. And then another one is the extension again from this low to the very high, and the extension here is 1 point. So now there you already have three reasons to get in. So you can combine any of them, the extensions, the retracements, or the projections. It doesn't matter as long as you have three reasons to get into the trade. Yeah. And then let's see if we have another example. So make sure that you take from the high to the very low there. That is 1. Yeah. So that there is your 38.2 retracement. And in this case, again, you've got this high to the very low to see if you can get some area. So what we are looking for here is a retracement up to to a specific area. And in this case, we're using again our Fibonacci projection from year to year. So all of these projections are now lining up in a specific area. So if we want to take this short, all we're doing is now looking for that area to be respected, because we have so many Fibonacci price predictions in that area. Yeah, what we have, let us just show you again. What we have is a 38.2 from there to there. We have, in this case here, we have a 61.8 retracement. From year to year, we have a 127.2. And in this case here, we have a 100% retracement. So all we're doing is finding a zone where there is a cluster of Fibonacci numbers in one little area. So the Fibonacci timing projections, this is the last part of it. These are the time projections that we are using. So let's say you have, in this case, you have that high there and you have that low. So when can you expect that next swing low? So you take your Fibonacci time projection from the high to the next high, and then it will give us possible areas where to look for the next move and the next wave going short. So if you need help with the projections or any of those, you can just leave an email or questions below. This stuff works very well if you use them in combination with all of the Fibonacci tools, not just the retracements or the extensions. And here's another example from this high to this high. Here we can see the next swing low was right at the 0.38.2. And then the 100% reacted, and then here again the 127.2, there was some reaction of that level as well. So this, together with the extensions and the projections and the retracements, is a very powerful tool that we have in our arsenal, and those are all free tools. Guys, if you've enjoyed the video, leave a thumbs up and a comment, and I'll see you in the next one. This is Fibonacci.